Today, crypto markets plunge amid fallout from FTX's collapse.
New chaos in the world of cryptocurrency. FTX shocked investors by declaring bankruptcy this week.
By now you might have heard, Future Exchange, or FTX for short, one of the world's largest cryptocurrency exchanges, is currently undergoing bankruptcy proceedings when just a month ago they were still the darling of Wall Street. This is yet another blow to cryptocurrency. So what happened? Let's find out. So there are three major parties here. Let's introduce them. First, there's Binance and FTX. Both companies are one of the world's largest crypto exchanges. Binance is led by Zhao Changpeng, commonly known as CZ, and FTX is led by Sam Bankman-Fried, aka SBF. FTX was the darling for investors. Even the likes of Temasek, SoftBank, Sequoia Capital, and many more have poured multi-billions into it. Then there's Alameda Research, a trading firm founded by SBF in 2017, which is closely linked to FTX. Initially, Binance took a stake in FTX, purchasing a 20% share in FTX in 2019. With that, Binance took a long-term position in the FTX token, or FTT for short, to help enable the sustainable growth of the FTX ecosystem, aligning with the broader scope of the partnership. Then, on November 2nd, 2022, an alleged leaked balance sheet revealed that Alameda Research was also heavily reliant on the value of FTT, according to CoinDesk. It was not backed by anything stable, but by its own volatile assets. So when CZ announced that his company would liquidate any remaining FTT it held due, it triggered fears among investors that FTX would be unable to pay its debt. And this sparked a run on the exchange where people started withdrawing their money that's worth estimated about $6 billion. And this sent FTX into a crisis. Eventually, FTX stopped all withdrawal and is currently in legal proceedings pending bankruptcy. With the slurry of crypto bad news from Terra Luna's $45 billion bust and Celsius fallout and many other crypto-related companies, it has been an unlucky year for cryptocurrency investors. And our hearts goes out to the investors that are going through a very tough and difficult time. Bitcoin price hovered around $17,000 as of November 11, 2022, well below the peak price of around $68,000 it reached in November 2021. Investors' confidence is at its all-time low, not to mention the other crypto collaterals, the so-called Sam's coin like Solana, due to its relationship with FTX. Furthermore, with so much bad press and loss of retail investors' money, stricter regulations would occur, and this would further drive sentiments down because many went into cryptocurrency because it was unregulated and decentralized. And there's views that these large crypto companies have poor risk management and are over-leveraged.
Recent news further underscores these concerns and highlights why prudent regulation of cryptocurrencies is indeed needed.
Andrew, as you can imagine, and your viewers know that I can't speak about any possible investigations, but when you mix together a bunch of customer money, non-disclosure, and leverage, borrowing against it, and inside these companies trading, investors get hurt. And I think that investors need better protection in this space.
I do not believe that crypto is a bad investment because there are real utility use out there. But it is well documented that the majority of the retail investors are speculating, believing that they can sell it to someone else at a higher price. Don't take my word for it. Hear what are some of the successful business minds and investors are saying.
If you and I buy various cryptocurrencies, I mean those.
So, that's a greater fool theory. That's what you're saying.
It's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price. Does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-predictable. If you don't understand it, you get much more excited than if you understand it. I mean, people, they like to speculate, they like to gamble.
I'm used to asset classes where, like a farm, where they have output, or a company where they make products. Have an asset class that's 100% based on sort of greater fool theory that somebody's going to pay more for it than I do.
But just like the dot-com bust of the early 2000s, 95% of the dot-com companies all crash and burn, while the remaining 5%, the likes of the Amazon, Google, and Apple, rose and became victorious, and they changed the world. So I believe crypto will be the same. So what's the takeaway here? Firstly, invest with money that you can afford to lose, because you never know what's going to hit you, and if it hits you, you don't want your quality of life to be affected. Secondly, invest in productive assets like property or stocks, because these assets produces services or goods that people want to buy. They produces income, there's value. It's okay to buy non-productive assets like gold or crypto, but just keep it in a small part of your portfolio. Here at Bite-Sized Investments, we share about fundamental investing backed by qualitative analysis and data. We invest in stocks and income-producing real estate. And we are never too worried about the price of our real estate going up or down, because we are focused on the income that our real estate produces. If you have enjoyed what we shared, please like this video and subscribe to the channel. Do click on the bell notification so that next time we release a video, you will be notified. Want to find out how to invest in cash flowing rentals? Check out this video here on how we bought one rental property and got 2 for free, or see what YouTube wants you to see. I wish you a very good day. I thank you for your time, and I see you in the next one. Thank you.